Hey guys, I'm sending you this very important update for the stock market in general. So, long story short, I think that the market has already peaked and that we should see the stock market coming down. Right. So, I will start with this S&P 500 first. So, if you have seen my previous analysis, I mentioned these uh, two wages, right? One the external one and the internal one, right? And I thought that it will actually be stopped here, 530. In fact, when I was doing the analysis, I mentioned that this is the peak, right? Because it's quite near there, right? So what happens is that I believe that this is actually a throwover, right? So let me turn this over here as a throwover, right? So throwover is actually quite common uh, during the very last wave, right? So overall, the entire wave has been updated, right? Such that it's a five wave, right? So it's one, two, three, four, and five, right? So this fifth wave is a throwover, right? So this is when there is no extension to the fifth wave, which I don't think there will be because the wave three is actually shorter than wave one, which means that wave five actually has a maximum target, right? So if you see this Fibonacci line, right, where I draw from wave three, the maximum target for um, S&P 500 SPX, right, is actually 6,037, right? So, personally, I do not think that this is the case because I think that there is a wave breakdown over here, right? Which, if I have to draw this, it will look like this, right? So this is a one, two, three, four, and five. Now, sometimes it's not so clear on the cash side. So if I look at these, this is a CFD, right? So it actually has the pre-market and post-market data like futures, right? It's just that it's better to use CFD. I mean, it's more convenient because you do not have to cater for the rollover, right? So there's a difference in the rollover points that you need to adjust for. So CFD has already done that. And if you see over here how I draw the one, two, three, four, five, right? You see that five, this five wave over here, one, two, three, four, five. This last wave has a Fibonacci relationship, right? For the entire wave that is just nice around this 580. Now, so this one is will constitute a wave by itself, and now we are going to likely a corrective wave, right? So, let's go back to this cash, which is the SPX. Now, obviously, when will this be invalidated is if it breaks this 5872, right? So if it breaks uh, to a new high, then this we will look at this next level, which is this 6037, right? But this is really the maximum that it can go, right? Where wave 5 is equal to wave 3. Now let's look at another one which is closely linked to the S&P, right? Which is this Nikkei 225. Now this hasn't really make a new all-time high, right? But over here you can see how I label this as a corrective wave, right? So this is a large A, B, C, right? So if we look at this, right, this A, B, and C, so this is actually a one, two, three, four, and the fifth wave, right, uh, is actually ending diagonal. So it's confirmed by this sharp move down. Right? So if you follow this, let me zoom in. It's actually A, B, C, X, A, B, C, X, A, B, C, right? So just nice this last price here is above the wave three, and then it also has this wedge looking like a structure, right? And it actually broke the trend line also, right? So we are sure that this is ending diagonal because of the sharp move down, okay, and up and down again over here. Now, if you look at this, you'll see something like a head and shoulders here. You see this? You'll see something like this head and shoulder. So If let's say I have to draw this over here, one, two, and a three, right? So the right shoulder is actually lower than the left shoulder, right? But we can observe some more, right? Because what happens is that we could actually have A, B, and C, right? So this one is like uh, a correction that takes longer uh, than it should, lah, right? So because why I say longer than it should is because of this distance between these two, and the distance between these two is almost equal, right? So how do we do trade this will be if it goes up, right? Uh, or even if it goes up here, right? So we just look at the left shoulder as a guide, right? So we might need to scale in here, right? But what is most important is this will actually be what I call the breakdown line, right? So let me put at the bottom and on the right side. So this breakdown line, right? So this will be where we will know that we definitely need to have a position now once it breaks down. So this is for Nikkei. Now the a lot of hype has happened recently with the Hong Kong and the China market, right? Uh, if you have towing account or what, you will know that actually a lot of retail they actually come into the market after the holiday, the week long holiday, which is this is the first no sorry this Tuesday is the first trading day actually, right? So a lot of them open account, went all in, and then yeah, so it's a loss for a lot of them. So let's look at this technically, and you will see that actually what happens is that there is this trend line that has already been broken, right? So uh, I would say that the Chinese government will not step in un- unless it has fallen another, say, wait, I think they announced the policy around 26, yeah. So this is a base where they will definitely try to protect, which is around 12,000, yeah, around 12,000, right? Let's round it down. So the downside is at least until 12,000. Similarly for the Hong Kong market, right? You will actually go down together. Um, yeah, so it will be around 19,000. Then we'll review again, but the downside is quite a lot, right? More than 1,000 points. So yeah. So another thing to look at for the global markets is that if you just look at the U.S. market, you will realize that only the S&P 500 and the Dow Jones has made new time all time high, and the Russell 2000 actually hasn't made a high since November 2021. Right, so this entire move is actually a corrective move, including this move over here. This up move over here is a corrective move. Now, what's interesting is over here this sharp move up. So, for those of you who are in the market during the Great Financial Crisis, you will realize that uh, when the smaller cap stocks start to go very fast, uh, it also means that people are thinking that the leaders are expensive, so that is why they went into the cheaper stock, which are the laggers, right? So over here the Russell 2000 can be considered the laggers, right? So there is a rotation over here to the smaller caps. So this is also a concern, right? But largely you can see that this whole move is actually a correction, right, for a few years already. And the other thing is also Nasdaq. Nasdaq hasn't made a new high yet also, and in fact is also having a wedge. So we're having a wedge here, right? So and if we look at the let's look at a few of the component stocks, right? So Apple made new all-time high, but Microsoft has really broken down. So this is a clear ABC, right? And down, up, corrective, down, broken down, try to reach back, but it's still below the trend line that it has broken. Right, so this is Microsoft. Google is still far from the peak. Same for Amazon. Nvidia, same. It hasn't reached a new all-time high. But what is interesting about Nvidia is that it seems to be the only stock that is keeping S&P up. Right, that's a general view that I have. Right, Tesla do not really need to go down. It get down and never recover. So if the overall position on the indexes is correct, right, that actually it has really peaked, what happens is all these all these component stocks, they are going to go down, right? And there may be some concern on, or I mean, some people might think that there will be a capital rotation from US to China and Hong Kong, but from the charts, it doesn't look like that will be the case. And the reason is very simple, right? When the US market goes down, right, you'll pull down all the global stock market. The reason is very simple, is because of liquidity, right? So if imagine you are a hedge fund manager, a global hedge fund manager, you have position in the US, you have position in China, Hong Kong, Japan. What happens when one side, like let's say you have let's say equal allocation, right? Equal percentage allocation. One side goes down, sometimes you may even be margin call, you need money top up, then you need to sell the other side. For example, what I want to say is that I think the global market as a whole, the beta will actually 10 to 1 very soon, right? And when all of them crash down, right, it will be a global stock market downturn. So that's it. Thank you.